They're saying, oh, we have ex-governors that are very much in support of our policy. A lot of economists are in favor of our... They're not in support of what reform have prescribed, which is getting rid of all payments and all reserves, because that is beyond ridiculous.
Everyone, welcome to the first episode that's recorded from a greenhouse. I don't know if you're in the same situation, Charlie, but I've had to close my windows and...
I am absolutely boiling, Jack. It's hit over 20 degrees here in the UK. I'm still wearing a long sleeve shirt, which is among some of the best decisions I've ever made in my life. So every Englishman on earth over 20 degrees is sweating and crying profusely, and I don't think we're any different. So this episode is brought to you by Dehydration, our first sponsor.
Very good. Yeah, and I had a challenge recently. I had an interview where I had to find a glass of water to drink out because I was so severely dehydrated. And I realised that every single glass I own is heavily alcohol branded and related. So I'm currently...
Well, I don't think our podcast... Yes, I was about to say, show these ladies and gents.
Got to cover up the branding there.
Excellent.
Can't give it out for free. But, yeah.
So we're in a top state of mind to be able to do this podcast today. So if we miss any facts, get anything wrong, normally we don't have an excuse, but this one we are just on the edge.
Yeah, let's just hope that the audience is also heavily dehydrated so that, it's not just our fault. We could also blame them and say, well, you're just not getting it. You're just not understanding.
Yeah, the way of academics around the world.
And speaking of people who don't understand things, we're going to talk about a party today that doesn't get enough press. You never hear about them. I don't know if it's quite a small one. Reform. Have you heard of them, Charlie?
Reform? They're the ones with like 4 seats, right? 5 seats that people don't shut up about. But yeah, I haven't really heard of them.
Yeah, 4 seats, but 90% of communication
yes.
in the news, right? So, but we're going to bring them up again.
Thank God we're talking about something different for once.
We're so unique with our the topics we bring.
Can I just say, if the Lib Dems did anything, we would talk about them too. But...
Absolutely. Please, we would like to
Please, we want to talk about someone else.
Negative way.
If any political parties want to do anything, we will talk about them as well.
But Reform have brought out some quite radical, quite extreme policies, very interesting and novel policies. And we're going to go through, I think, 2 of them today related to the central bank and their just general, it seems like, hatred for the idea or the whole concept of a central bank. But I'll leave the description and the everything down to you, Charlie. So what are we talking about here?
Yeah, so essentially what Reform want to do, obviously, as Jack was saying, in line with their general distaste, sort of similar to Liz Truss in their distaste for these so-called institutions, the central bank, Office of Budget Responsibility, but predominantly the central bank. What they essentially want to do is bring the central bank more under democratic control. So what they want to do is ban quantitative easing unless it is approved by the House of Commons, by Parliament. And they also don't want to pay any interest on commercial bank reserves. Obviously, commercial banks are private banks like Barclays, RBS, and they essentially hold reserves at the central bank like we would hold deposits at a commercial bank. Obviously, we don't hold deposits, Jack. We're way too broke for that. But most normal people obviously do. And so that's essentially Reform's plan. And the idea is to save money and to essentially reduce the reliance on quantitative easing as a policy by the central bank, which they say is undemocratic.
Yeah, brilliant description. Where should we start with that? Is it worth explaining what quantitative easing is?
It is most definitely worth explaining what quantitative easing is, because I think there's a massive misunderstanding of what quantitative easing is. People often refer to it as money printing or whatever, and it's obviously come under a lot of criticism because it's not under democratic control. This is obviously run by the central bank, and so people are a lot more critical of it. So, essentially, the central bank is there to be able to control short-term economic fluctuations. And they normally do this by setting the base interest rate, which is the interest rate paid for short-term loans between banks, which is called the interbank lending rate, and also the interest rate that is paid on reserves. So these deposits at the central bank held by these big private banks. But when that interest rate hits zero, like it did in 2008, like it did in COVID, when the interest rate is really low, the banks can't reduce that interest rate anymore. So they can't stimulate consumption and reduce saving to be able to get the economy going. And you can't make interest rates go negative because it impacts banks' profitability, which then negatively affects credit provision and also encourages people to just essentially store money under their blanket. So it sort of slows down the economy. So what happens is interest rates hit this lower bound, which is in economics what we call like a liquidity trap. And so quantitative easing is like a form of unconventional monetary policy that is used to stimulate the economy when interest rates hit this zero lower bound. And basically what the Bank of England does is it buys huge quantities of government bonds, private bonds, and other assets from commercial banks and credits those banks with increasing their reserves. Like, if we buy something from a bank, it would just increase the amount in our bank account, our deposits. And so any surplus above the required amount for these banks, because obviously commercial banks have to hold a certain amount of reserves at the central bank for financial security, but any amount above that can then be lent out to the economy, and it sort of filters down to people like you and me, Jack. And so there's a few different ways in which this happens. Basically, these commercial banks get all of these assets taken off their hands. They go, great. What I'm going to do is I'm going to lend that money out. I'm going to go buy these stocks. I'm going to go buy these houses. And that just increases asset prices in general in the economy and then creates this sort of positive, what we call wealth effect, where people feel more confident. They go out and spend more. And essentially it goes out to businesses, business loans. It encourages investment, encourages extra spending, etc., etc. So that's one way. Another way is it just generally increases people's confidence because they feel like the central bank is doing something to help them. And that's quite a powerful thing in economics. And then thirdly, the main thing that happens, which is what the central bank often cites, is that it pushes down interest rates on longer term bonds. And this is what we say pushes down the yield curve. Normally, interest rates on long-term bonds are higher than they are on short-term bonds to account for more uncertainty in the long versus short run. And so what the bank does is it essentially pushes interest rates down across the economy, not just on the short run, which is what the normal interest rate does. And so what happened in 2008 and during COVID, in total, the Bank of England bought about £900 billion worth of bonds, mostly in government bonds, but also in some corporate bonds as well. And this essentially just increased asset prices. Obviously, there are implications for wealth inequality there for the astute among you, It also pushes down interest rates. But note that the main thing I want to get across here is that quantitative easing is not money printing like we saw in Weimar Germany, the ancient Rome, or in post-war Hungary. Money printing traditionally involves printing of what we call base money. So printing of physical notes and coins, and that would be like the equivalent of increasing someone's deposits today, like people's amount they have in their bank accounts. Quantitative easing doesn't do that increase, and that would be called, like helicopter drops, the equivalent of someone flying around in a helicopter and just dropping out cash. And obviously that's hugely inflationary because then day-to-day people have more money and they spend and they chase the same amount of goods and it just pushes prices up. And that's what happens, in Hungary in post-war, you had an inflation rate of 41.9 quadrillion %, which is prices doubling every 15 hours, which is pretty extreme. Quantitative easing doesn't do that. Quantitative easing increases base money, but not necessarily broad money. So broad money is the money that we sort of talk about day to day. And that only increases to the extent that private banks use these additional reserves to increase lending in our fractional reserve system. And I won't go too much into that, but basically quantitative easing is not money printing. It's not nearly as extreme and doesn't cause inflation in the same way. The idea of quantitative easing is to find a way around the zero lower bound, which restricts central banks when times get really hard and interest rates are low. So I hope I've done that justice. It's been a huge thing in 2008 and in the COVID pandemic when interest rates were really low, but it's come under a lot of criticism from reform, Jack. So yeah, that's my little spiel. Sorry if we've lost half the audience, but yeah.
No, it's you can summarize it as it's trying to stimulate the economy in a time where conventional methods don't work. So why is it that reform hate it so much and want to make it, only be passed through Parliament?
Yeah. Well, so reform are following a little bit. I'll talk about the political reasons. I'll talk about the economic reasons. I'll start with the political. This is a really common thread across the right wing in the international world. Obviously, Trump is very anti the independence of the central bank. He wants full control of the central bank. Reform and Liz Truss are very anti the central bank. They believe it's undemocratic. And it also doesn't tie in with their idea of free marketism, because free marketism would imply you just let interest rates be set by the market. Anyone who studied economic history knows that that is just not a good idea. But they have this sort of ideological distaste towards the central bank. Now I'll get into the economics reasons. So the main one that they're citing is that when you do undergo quantitative easing, obviously what happens is the commercial banks have these huge reserves. I mean, I said they bought £900 billion pounds worth of bonds. I mean, that's almost the size of the UK economy in a lot of time. So it's a huge amount of bonds. So these banks have profited, not profiteered is the wrong word, but they've gained a lot of profit from these reserves, because what we do is we pay interest on these reserves. Same way we would, if we had savings, would gain interest from Barclays or a commercial bank. But what happens is eventually that starts eating into the central bank's margins. And essentially the central bank starts to lose money, which is then covered by the taxpayer. So Reform look at this and they go, well, we're paying a lot of money from the taxpayer to commercial banks. That's an easy win, politically and economically, right? So that's one problem. The other problem is that under quantitative easing, eventually you have to do quantitative tightening, where you sell all these bonds and you offload them back to the commercial banks. And this often happens at a huge loss, because the central bank buys the bonds very high and sells them very low, just because of the nature of the macroeconomic conditions that necessitates them buying them at those times, right? And so what compounds this problem as well is that we're making the loss on the sale and we're making the loss on the interest rates paid to these bonds. And so the argument is basically the government could mitigate this problem by stopping all payments on reserves at the central bank. Okay, so that's one of their policies. And the reason they want to ban quantitative easing in general, apart from if it's led by the government, is that one, they believe that the central bank is undemocratic, and that because of the implications on inequality and the huge implications the central bank has on people's day-to-day lives, that it should be under democratic control. That's, makes sense on the surface. I'll go into why it doesn't make sense in a bit later in. But yeah, they also think that quantitative easing is money printing. They've got a misunderstanding of what quantitative easing is. So they think it causes massive hyperinflation. And they presume that's the reason we had the inflation of the post-COVID era. It's not, but we can talk about that. And they also, similar to inflation, they believe in the devaluation of the currency. And obviously for the people on the right wing who, I don't want to make any enemies, but tend to have a loose understanding of what's important in economics, they believe having a really strong currency is really important. And yeah, but so they don't think that quantitative easing improves the strength of the currency, so we shouldn't think about it. And that's basically why Reform don't like it. I hope that sort of makes some sense.
Yeah. So why should we keep it? Why are their arguments wrong?
What, keep quantitative easing?
Yeah. Well,
yeah. Okay.
Not do what Reform wants, which is to make it so that Parliament has to.
Yes. So should we start off as to why I don't believe the central bank should be made more democratic? That's where we
yeah, good start. Yeah.
Okay. Well, maybe I should frame that in why the central bank shouldn't have less independence. Otherwise, it sounds a bit dictatorial.
Yeah.
Well, the central bank essentially is a really technocratic institution. It has very strong economists, very strong mathematicians, and whatever. That's sort of a proof by authority argument, which obviously shouldn't be accepted. Right, I understand that. But there's a real strong argument in economics called the Barrow-Gordon argument, or the Barrow-Gordon explanation or model, or whatever you want to call it. And it's well known in economics that a central bank should not be under control of democratic institutions. And that's because democratic institutions have this incentive to prioritize employment over inflation. And there's this thing in economics called the Phillips curve, where basically if you increase inflation, you reduce unemployment, theoretically. And so governments theoretically should prioritize unemployment and therefore push inflation up. Okay, fine. If that's democratic prerogative, that's fine. The catch is that when people start to anticipate this higher inflation, that nets out any of the positive effects on employment. And so you can sort of show that someone who prioritizes having employment benefits as opposed to keeping inflation low will get neither. They'll have low inflation, they'll have high inflation, and they'll have low employment. Sorry if that's a bit techie, but the idea is basically if you aim to have high inflation and low employment, you'll get neither. You'll just get high inflation, sorry. So basically you have to have a politically removed government, a politically removed central bank that people trust to what we call anchor inflation expectations. People believe that inflation will always go back to 2%. Because if you don't, then the Phillips curve breaks down and you don't get any of the benefits. And so that's the idea. And to have a democratically elected central bank, you run into high inflation, what we call stagflation, a lot more frequently. And that's why it shouldn't be democratic. You need someone that's politically removed, and we know for a fact will, over the long term, always commit to 2% inflation. And my thing to that is, as long as the central bank doesn't overstep its remit, the central bank should very much just stick to the inflation target and not think about anything else. My main problem at the moment, I shouldn't probably talk about this being a future employer,
given that you're about to start,
well, an employer. But I think, maybe at certain times in history, the bank has overstepped that at times, and that shouldn't happen. So, but that's why I think it's not a problem.
Okay, so that's the political side of making it still independent. It sounds like reform have an issue with quantitative easing, even in an efficacy and practicality point of view. So what about that? Why would you defend the use of QE in the times we used it?
Well, my that's a really good question. And I'm not sure I fully know why reform are very anti it. I think, and I don't mean to be patronized, but I do think it comes from a misunderstanding of what QE is. I think they believe that it is money printing, and they say that you can't improve economic growth by money printing. And that's very true over the short term. Over the long term, economic growth doesn't come from quantitative easing. But my main support of quantitative easing is that it is our only real measure in monetary economics to be able to support the economy when there's a downturn. If you can't cut interest rates anymore, then fine. People who are wealthy and vote reform or whatever will be fine probably in these recessions. But people who are don't have the means to support themselves struggle in recessions. And so we can't just wait it out. And a lot of people on the right wing, if they really subscribe to free market economics, completely, very much prescribe to, in a recession, you just let wages fall, you let prices fall, and then everything adjusts and you go back to full employment. We've known in economics for 60 years that that's just not how it works. So that they are subscribed to a bit of an outdated understanding of economics in terms of the labour market. And you need active monetary policy to mitigate downturns. And that's why I would support quantitative easing. And also it's really important we need the central bank for the regulation of the financial system, what we call macroprudential policy. You need to be able to regulate the central bank to be able to ensure that 2008, 1929, 1980s don't happen. We've tried free marketism in the free markets enough, and now we sort of understand why it doesn't work. That's my perspective. I don't know what your thoughts are on this.
Well, I guess I don't think reform would make this argument, but some people would say you could do the classic Keynesian style, just spend a lot of money as a government in those bad times of zero lower bound where monetary policy has less of an impact. But I believe part of the benefit of having quantitative easing is to support the financial sector specifically and de-risk the financial sector, which in the 2008 crisis we had a credit crunch where we're not investing anywhere near as much as you need to. And to target that specifically, you need more unconventional measures like QE rather than just spending a lot of money to support. So it seems like it's a very important unconventional measure that we need in the worst scenarios where hopefully we don't have that scenario again, but you can imagine probably will at some point.
Yeah. And obviously their concern reform has been that this will all cause inflation. But there's no evidence really in the academic literature to suggest that any of the recent inflation was caused by quantitative easing. Obviously, we had the largest quantitative easing program, a very large quantitative easing program after 2008. And then what followed was a decade of very low, almost deflation. And correlation is not causation. I don't want to make that argument. But what I'm saying is it's not a one-to-one even correlation. The reason that we had such high inflation during COVID was a supply side problem. More what is coming to light that was more of the problem. Global supply chain shut down, and that was more of the reason. And the reason central banks didn't raise interest rates quick enough was because they thought it was going to be transitory. It was going to be over, and then once the supply side thing ended, it would be fine. What happened was people started to expect higher inflation, bid up wages and prices, and then that causes what we call a price spiral, or wage spiral, inflation wage spiral. So it's more complex than reform is giving it credit for. It's not just because of quantitative easing. Actually, what happens is, I would imagine very little of this money actually filters down into the real economy sometimes. So you actually got the opposite problem sometimes, that it's not overly effective, but it's definitely not inflationary. But that's their other problem. They sort of look at pictures of Weimar Germany and Hungary with people with the wheelbarrows of money, and they're scared of that. So, yeah.
Yeah, I think maybe it's worth pointing out to show the stark difference between just helicopter money of giving people money and quantitative easing is that quantitative easing is giving banks these reserves that we've talked about. Reserves have to be kept within the financial system. They can't be spent directly on goods. So in that way, it's not like cash, which I imagine it's why it caused not inflation in consumer goods, but asset inflation, right? So asset prices went up quite significantly.
Yeah, exactly. But that's one of the mechanisms that drives the money coming down from the financial system too. So it's these things that look pretty perverse on the surface are actually the mechanisms that are helping it stimulate the economy. And obviously that has critics. Obviously, if asset prices go up, that causes inequality to get worse. But it's an unfortunate side effect of something that is really necessary. It's a medicine with bad side effects, but it's not. Don't get rid of the medicine.
Yeah, that is such a great segue to the next part, which is why do we have to pay interest to commercial banks on the reserves that we've just created? That seems like we've created all this money and then just giving away money to the banks. Why is this a necessary evil?
Yeah, and you pay tax, and then that money goes to Barclays. Why does that happen? And this is a really, again, a difficult thing to stomach, but it is a real necessity of the financial system. Remember when I said that central banks primarily dictate monetary conditions and steer the economy through the use of the interest rate? That is the interest rate paid on reserves to commercial banks. So if you remove that, you essentially remove the only thing that connects the central bank to the financial markets, which then connects it to the real economy. And so essentially it just gives it fewer channels for monetary policy to have an impact. Monetary policy becomes less potent. Now all that it affects is the interbank lending rate. And so that leaves us vulnerable to future economic shocks. And then if interest rates hit the lower bound, which they more likely will because they're less effective, you then don't have quantitative easing. And so if you have a negative economic shock, there's very little you can do about it. And so basically removing this would completely make the central bank a little bit impotent, wouldn't be able to do anything. And then you have also the effect that it actually reduces interest rates in the real economy. So it would actually be quite inflationary on the first hand, in the beginning, because you remove the interest rate and then central banks are like, oh, well, we're not paying interest rates on any of this. So they lower their interest rates, that filters through to the economy. And then you get this actually inflationary spike. I mean, you could mediate that a little bit with different policies, but it still stands as a problem that hasn't been fully thought through. I don't know what your thoughts are on it, Jack.
It's just an essential part of our system in how we moderate the fluctuations that you see in economy. So again, you mentioned that it's all about controlling the short-term fluctuations we face, which is, if you heard of the boom and bust cycle, where you can have a good boom but followed by some sort of recession. We're trying to smooth that boom and bust so that it's more steady and stable. And we do that with the changes in interest rates. Take away that policy, which passes through into interest rates you see in the actual economy. So if you increase the base rate, the rate that the reserves are receiving interest for the commercial banks, but also the rate that they're loaning to receiving loans from the central bank, that passes on to interest rates in the actual economy, and that's how we moderate how much consumption and economic activity is going on. So if you take that away, we lose control of inflation, we lose control of the business cycle, and it leads to a much more volatile world, which investors are less willing to invest in a scenario where we don't know what we expect tomorrow. By targeting inflation with these tools we have, and by having the reputation that we can meet those targets, investors are much more comfortable investing, which is what we need. Take those policies away, they're not.
Absolutely. Very good. So an alternative that's suggested by economists, and this is why Reform sending their messaging very well. They're saying, oh, we have ex-governors that are very much in support of our policy. A lot of economists are in favor of our... They're not in support of what Reform have prescribed, which is getting rid of all payments and all reserves, because that is beyond ridiculous. What a lot of economists are in favor of is actually making our system more similar to a European style system, what the European Central Bank does, which is what they do is they pay essentially interest on reserves up to a certain point. So they call it a two-tier remuneration system. Just economic speak that could be made so much simpler. Another example. But you just have, you have whatever it is, 100 billion, and then anything after that you don't pay interest rates on. Fine. A lot of economists say this won't I don't know if I can talk too much to this, if I'm completely honest. A lot of economists are a bit on the fence about this. But the idea is that you still have that lever of monetary policy, but you also make a saving which can then be credited back to the Treasury. And the IFS estimates this could save anywhere from about 30 to 45 billion. And so the idea is that, you pay interest rates, you still give us that lever, but you don't do it all the way up to whatever. I don't know what your thoughts are on that, Jack.
It's hard for me to say which one's better, because you'd have to do an insanely complex cost-benefit analysis of the cost is obviously that you lose control of inflation targeting and our monetary policy controls. Costing that is quite difficult. How much benefit do we get from having that control? How much cost would there be to losing a little bit, not all of it, but a little bit of that control, compared to the benefit of obviously not having to pay the interest rates on these reserves? So yeah, you say you're saving 40 billion, but compared to what cost of losing the control, it would be insanely hard for me to judge where the cost stacks up. But it's worth pointing out that if you lose control of the inflation system, you'd have to raise interest rates, the base rate, higher to compensate for that.
Yeah.
So that obviously affects people in different ways too. And there are costs. Yeah. It might be not as immediate as 40 billion clearly saved, but it would exist somewhere in the system. It's hard to calculate that.
And I want to throw a couple more costs in there just because I'm with you on this. I don't know if I want to make a definitive statement on it because it is ridiculously complicated. And, but you might also say, well, if you stop paying interest rate on reserves, then commercial banks are less willing to keep reserves there anyway. So it might limit the effectiveness of the financial stability of the financial system. There are ways around that, but it still, again, stands. You might say, well, obviously, like you said, the interest rate's high. It might compromise financial stability of the banks if they're earning less profit, because it essentially acts as a tax on the banks. And so that can have adverse effects on what we call allocative efficiency. And also it might make them more practically want to leave, go somewhere else possibly. And so you have that problem as well. I just wanted to bring up one more point that's been raised, and I think I agree with you on this. But there's talk that the way in which the Federal Reserve does this is better than the way the Bank of England does it. So what you have is, I don't know how to pronounce this word, if I'm completely honest. But it might be prudent to move away from what we call indemnity. Indemnity, which is a legal term, where the government treasury essentially covers any losses from the central bank. And so the central bank might move towards a system adopted by the Fed where they create a deferred asset, which is essentially just a loan to themselves, which they pay back later if they earn a profit later. And I think the idea is that this smooths any shocks to the Treasury Reserve, which is great in essence. I don't know what your thoughts are on that.
Yeah, we'll get very technical just about how banks separate balance sheets, basically, because the UK did something different to the rest of the world when we had 2008 and we had the quantitative easing, and we separated quantitative easing assets. So we purchased quantitative easing assets and then raised the reserves of the banks in response. But we put that in a pot, which was called an asset purchasing facility, which is separate from the general balance sheet of the Bank of England. And it was so that you could clearly separate the two, and then the Bank of England agreed with the government that the government would pay them if it made losses, because if the interest rates went higher than the interest they're receiving on those assets, so if they made losses, the government were going to have to pay out for that. But equally, if they made profits from that remote vehicle, then the government would be receiving. So bearing in mind, interest rates have been very low for a while, and the UK government has been profiting from that for a while. It's only now that interest has risen that we've decided, oh wait, we've got to start paying it back now? What's going on there? I think that's where everyone's a bit annoyed. But if you understand that over the long term, you've got sometimes you're receiving money and sometimes you're paying it back based on interest rate fluctuations. The only difference between that and the US system is that theirs is ticking along and there's no exchange going on. It's almost like, I don't know if you use Splitwise, but it's a bit like just keeping an account in the background that sort of keeps it. But there's no payments, no transactions, just keeping a tab on it.
No. Exactly. You might argue that it would be better if the Treasury and the government have a smoother income over time so you don't get this problem where the Treasury has to manage it, and rather you just have, the technocrats But then you might say, well, then that's undemocratic. So it's depends which way on the argument you swing. Yeah. So we've made no real prescriptions here. It's been more of a defense against a reform policy and a defense of the central bank, which I don't feel like many people actually give that often.
Yeah, well, I think people sort of know we need it, but don't know why. So hopefully you've given an example of why you need it. And it's to control inflation expectations so that investors are happy and confident to invest in our economy. Lose the control of your monetary system, like reform is suggesting. Inflation goes out of control and interest rates might have to go even higher, and that affects your mortgages at home. So you understand that it's a bad system.
Yeah. So is that another weekly dose of wisdom delivered?
It is indeed.
So we can go on back to our life.
Yeah, compared to Reform's weekly dose of idiocy. So we sort of balance that.
Yeah. Exactly. So you're welcome, listeners.
Very good. Right, we'll see you all next time.
Hello everyone, this is Charlie, Jac's better half. If you like the episode, please do consider giving us a like and subscribe if you're on YouTube, and a follow and a 5-star if you're on Spotify. It really does help us out. Thank you, and we hope you enjoy the episode.